Zambia. It's a country probably not on the radar of most investors. But like the mighty Zambezi river it's named after, Zambia's economy has been growing slowly and steadily, recording a GDP growth rate of over 5% per annum. Now the country is on a brink of change. A new transitional leader, Rupiah Banda, begins his term facing a global economic slowdown, a drop in commodity prices, and rising food and fuel prices. But many say Zambia has faced a lot worse, from record interest and inflation rates to high poverty levels. And now is the time to decide on the future of Zambia's thriving economy. And luckily, it's in a good position to do so due to some sound macroeconomic policies and a record boom in copper prices.
Most fundamental reason, I believe, has been the openness. Most of this growth, of course, has been spurred by the copper boom. Now, copper has always been the underground, but for people to work it, to dig it out, it required a government that is open, a government that can be trusted by outside people.
We are seeing, a lot more development, in the country. I think before we only had one mine a few years ago. Now we have about, 6, 7 mines, and we are seeing a lot of, private owners. A lot of investment is really coming into the country.
But the foundation for this growth was laid in 1991, when Frederick Chiluba came into power and instituted the country's grand privatization program, which privatized many state industries, abolished exchange controls, and endorsed free market principle.
Historically, there was an issue with the way things were during the days of the command economy, during what we call the Second Republic, the days of Kaunda. In those days, the government or the company would look after everything for your health. They would make sure you had a hospital, school. They would make sure your kids went to school. Mealie meal. There was even coupons for mealie meal. So they would subsidize food in the agricultural sector and the productive sector. Jobs were almost guaranteed. And then when things were liberalized in the early 90s, then we really had a shock.
This liberalization of the economy has seen over $9 billion worth of foreign direct investment, reported for 2008, spur development in all sectors. Under the leadership of former President Levin Mwanawasa, the country opened up its doors to international investors and in particular turned away from the West to attract investment from India and China.
The difference between, shall we say, Chinese investment and other investment is that it comes with what I would call grants. So they give you money without strings attached. But at the same time, they obviously want to increase on trade. And the bulk of our exports, for instance, copper exports, even though on the manifest it's destined for Switzerland, actually ends up in China.
It's China's growing economy that has set off the world's GDP. And this has been the driving force behind the copper boom in Zambia. The Chinese dragon needs copper for its industrial expansion, and that's why much of China's investment in Zambia has been focused on copper processing.
Virtually the raw material of copper is processed in Zambia, completely up to 99%. What we export is basically the final product of copper. However, we need to set up our own industries in terms of processing the copper into cables, various items that are semi-finished products. I think we are getting investments. The Chinese are interested in that. The Malaysians are interested in that.
But with copper prices almost halving from their peak of $8,900 last year, the future looks bleak for miners and the copper belt. This, combined with the country's new mining tax regime, has created a sense of uncertainty and has, like other mining houses around the world, led to job cuts.
Technologies have improved now. So we have more efficient technologies now, which means that even at reduced prices, I would like to believe that mines with efficient technologies will still be able to make a good profit. The other thing is that if the price goes down, then you have to go for more production in order to have a similar income. Now, I know for a fact that, for example, Rumana mine is going to be one of the biggest mines in Africa. And this means that we will have a lot of production of copper. So this will compensate for the falling prices.
But while technology alone won't save mining houses, authorities say the increased mining taxes won't crush the industry.
Whether the current mining companies would want to shut down and leave, I do not believe that the issue of the taxes would be the prime move for that.
Copper provides 80% of Zambia's foreign exchange earnings, and government has realized that to put all your eggs in one basket is not a great idea. So like its neighbor Botswana, Zambia is focusing on diversifying its economy through sectors like financial services, construction, agriculture and tourism.
Zambia did realize that they cannot continue to have a mono economy that's just based on copper mining. Having said that, agriculture does offer major opportunities for diversification. But again, people must have access to credit. Again, there must be roads that penetrate the rural areas so that people can actually be attracted to go and invest in the rural areas. Tourism is another option, and this has been growing in the last 5-6 years. It does offer opportunities. And again, some areas can't be reached because of infrastructure. So it does appear to me that infrastructure is at the center of diversifying this economy.